Greg King is the CEO of Osprey Funds. The Osprey Bitcoin Trust is the lowest cost publicly traded Bitcoin focused investment product in the world. Greg and Joe discuss the importance of protecting your Bitcoin investments and how Osprey Funds can help you with that. They also discuss the benefits of placing your Bitcoin investments in your IRA to maximize your tax savings. Greg gives his opinion on the future of the crypto market and why it's important to know when to pivot.
Hello, Greg. Welcome to the show. Why don't you start by giving us a brief background about yourself?
Sure. Great to be here. Background about myself. I guess I started as a Wall Street guy in equity derivatives with Barclays in London. And that taught me a lot, to make a long story short, about how the capital markets work and what really drives flows, on a global basis. In '05, I moved to the US and started working in the New York office for Barclays. And that started a progression into exchange traded funds, where I built a number of exchange traded funds and launched them for Barclays and a number of other companies. I started my first company 4 years later in '09. And in 2015, started my second company, RexShares, and just rolled out the third, Osprey Funds.
So one of the biggest questions in crypto is how did you stumble upon it, or what led you into crypto?
Yeah, crypto, I remember very specifically, I was at a conference and I was learning about ETFs, had nothing to do with crypto actually. And I think it was on my phone, just looking at news articles and came across Bitcoin. And at the time I was pretty interested I was pretty dissatisfied with gold and silver because I'd been buying a bunch after, all the money printing in 2008, 2009, 2010. And it really wasn't doing what it's supposed to do in my portfolio. So 2013, found out about Bitcoin, bought a couple of Bitcoin, and that started this whole process for me. I guess it's been 8 years.
And so now you started originally with RexShares, is that correct?
Yeah, RexShares is the company I founded 5 years ago.
Okay.
And we originally pursued a Bitcoin ETF with RexShares specifically. And then I created Osprey Funds really to separate the brands and create a digital asset only investment company, which was wholly owned by Rex until just this month. And we've spun it out as a standalone company going forward.
No, are they separately managed now, or are you responsible?
I'm responsible for both companies still, but the teams are separate. So yeah, they are separately managed.
And so what is, I guess, RexShares kind of moving forward? What does that company do?
So RexShares was really a continuation of everything I'd done to date, which effectively is building asset management products using exchange traded wrappers, but focusing on alternative asset classes, because that's really my background. It's in derivatives and it's in commodities, and that's how I got my start. So it's kind of like everything away from stocks and bonds. The plain vanilla 60-40 stuff, lots of people doing that. We don't add a lot of value there. So we were always focused on the weird stuff, commodities, volatility. I did a bunch of VIX products. And so crypto kind of fits right in. But RexShares going forward will be all of that, X crypto.
Okay.
So for example, the biggest product we have is a leveraged product that gives exposure to top 10 stocks, including the FANG stocks, Facebook, Apple, Amazon, Netflix, Google, and a few others. So definitely interesting products. It's just nothing to do with crypto. So we decided to separate the two. It just makes a lot more sense. Once you figure out that crypto is its own world, really. It's its own asset class, its own universe.
Yeah, I feel like most crypto investors solely invest in crypto until they get late in the cycle, and then they start talking about how they're going to time the top and exit and need to go into something else during the bear market. And that's when maybe stocks pop up. But otherwise, a lot of crypto investors typically don't mention stocks as much.
Yeah. I do think there's a happy medium. It's not like I have 100% of my portfolio in crypto. But yeah, those of us who used to kind of live in the stock world and now live more in the crypto world, it's like, I really don't want to go back.
Yeah.
So much more interesting here. Lots more to learn and do.
So when it comes to the Osprey Funds, does it solely only have a Bitcoin trust at this time?
At this time, yeah. That's our first product, flagship product. Makes the most sense to come out with Bitcoin first. We have a number of things in the pipeline, though. We're not stopping there. That's for sure.
And now based on, what's kind of your opinion on the Bitcoin price action over the last 12 months and, where it's at right now?
So yeah, just under 60K right now, and, crossed the all-time high, end of November. right? So that's been 3-4 months. I mean, the way we look at it, if you look at Bitcoin historically, after an all-time high like that persists for 1,000 days or so, and then gets, decisively crossed, there's only been 3 or 4 of those instances in the past. And typically, on average, you'll see a 900% rally. So basically, Bitcoin goes up an order of magnitude after one of those all-time highs gets put in. And then don't forget, after those corrections, right? Because that 20,000 high, was followed by a, whatever it was, $3,500 low, right? So once that whole cycle has churned through, Bitcoin historically goes up an order of magnitude. So that's kind of what we see ourselves in right now. And the last month or so has been some consolidation between 50 and 60,000, but I think that's perfectly fine and healthy. I think we're in the middle of a bull leg here.
And are you in agreement with everybody else kind of as a store of value at this time?
Yeah, I mean, yeah. I think that's the main use case for Bitcoin that's emerged. I know it's possible to be used for other things, but and perhaps that isn't quite what Satoshi originally intended, but I think that's emerged as a viable problem that needs to be solved. And I remember Steve Jobs used to say that people don't know what their problems are and until I give them the solution for it, right? So I'm not sure everyone realized, we've got a problem. We don't have a global digital currency that's not fiat and finite in number. And now we do, and people are realizing, hey, that's actually a good thing we have that.
So when people come to you to invest in the trust and they ask, how do we value Bitcoin? What's your opinion there?
That is a tough one. Obviously, they're not cash flows that are being spit out of Bitcoin to the holders anyway, maybe some to the miners. But, I think there's a lot of different approaches. The one that's the easiest for me to explain and for folks to conceptualize is the analogy to gold. You've got a $10 trillion market cap, roughly speaking, on gold. You have 1 trillion on Bitcoin. At least for the next, little bit, it's about Bitcoin pulling even with gold. And I think that those of us that are long and believers in Bitcoin can see that happening. I see people talking about Bitcoin eclipsing the size of gold and getting many times bigger. And I think that's possible. But as a first step, it's easier to conceptualize Bitcoin pulling even with gold in terms of its market cap as the twin brother, but fraternal twins, not identical.
So do you think that the discussion is more around Bitcoin and gold or Bitcoin versus gold?
It depends on who you ask. I mean, there's definitely the Bitcoin versus gold. I don't know. There's nothing wrong with gold. Gold's existed for thousands of years. I own gold. It's not, I'm not a gold hater. I just think that, I don't actually have a landline anymore. I was going to say I used to have a landline, but I have a cell phone too, but I don't actually. Got rid of it. But it's, gold still has a place in the world's, financial system. So to me, it's not about Bitcoin versus gold. It's about Bitcoin and gold. And then over time, just kind of let the chips fall where they may. There's definitely pros and cons. Bitcoin, though, once I did sort of sit down and analyze its features as they relate to what constitutes, a sound money or the best store of value. I mean, it does have some pretty impressive features that, that gold doesn't have, right? And gold has been the best sound money instrument that we've ever had. So when you look at it that way, it's like, maybe we are onto something here.
So you guys set up the Osprey Bitcoin Trust for people to have access to a Bitcoin product. And can you start with maybe why someone would buy the Osprey Fund versus spot BTC?
Yeah, it's really about constraints and it's really about packaging. I mean, we all have different ways that we hold our assets. You might have some cash in your pocket. You might have some credit cards in your wallet. You might have a checkbook lying around somewhere. You might have a brokerage statement. And these are all pockets of cash that we have, right? And what we find and what we know is that the majority of savings that's not held, in a savings account or CD or something, wealth that's held for retirement purposes is held in your standard brokerage accounts and IRAs. That's $30 trillion or some number along those lines in the US. And those assets are not necessarily going to leave the system just to go online, open up a wallet and buy some crypto. You can have both. It's okay to have both. I have both. I have wallets, various wallets. I have, ledgers and little devices, but I also have funds that I hold that give me exposure to crypto. And I can do that within the convenience of my brokerage account, my IRA for tax benefits, and also my advisor can manage that holding as it relates to my overall portfolio. Because these things, these investments, if they're sizable, you definitely don't want to make them in isolation, right? You want to make them in the context of your overall strategy for retirement or whatever it is you're trying to do with your portfolio. So it's really about creating a vehicle that can be delivered into that account. And so in that sense, you need, you don't strictly speaking have to have, but it's better if you have a ticker-based product in the US that can be traded through a brokerage account.
And how do investors currently get access to the trust?
There's two ways. So where we are in the US regulatory environment is the SEC has not approved a Bitcoin ETF yet. So what you have are these trusts, which incidentally, a Bitcoin ETF would be the exact same legal structure. It would simply be most likely a grantor trust based in Delaware, holding physical Bitcoin. That's the structure that they use, that State Street uses for a gold, their gold fund, et cetera. So it's not about the legal structure changing. It's really about some of the permissions, like having a redemption feature, allowing for market making and offering shares publicly that haven't been allowed yet. So for the moment, the way that the trust works is we offer shares directly to the public, but that's to accredited investors only. So higher net worth individuals, although those standards have been lowered recently. So a lot of people in the finance industry, for example, can qualify, whereas they may not have previously met the income or net worth requirements. So those investors can come to us directly at the website, ospreyfunds.io. And subscribe right there. It's digital, DocuSign process. We try and make it as easy as possible. And they get shares of the trust at the NAV. Comes with restrictions, not made up by us, but just the regulatory environment is you need to hold for 1 year, and then those are available to be resold if the person chooses. Secondly, you see our fund trading under the ticker OBTC. And those are those secondary market shares. So this fund is actually over 2 years old. And we have investors who've held already for the required time period, and they are able to sell under that ticker symbol. And really, that's just a convenience, so that you don't have to move papers around manually. You could just use the ticker symbol and interact through brokerage accounts. People who buy those shares from our original investors may be coming in for the first time. They don't have that 1 year holding period. They can just buy those shares in their account. So if you're able to do that by your broker. Some brokers allow this, some brokers don't. We know that Fidelity and Schwab and some of the discount brokers do. Then those people buy those shares from original holders. Now, one of the pieces here that people have to be careful of is those shares trade at whatever price those two parties agree, right? And it may not have anything to do with the actual net assets in the fund. We don't control that price. It's just basically supply and demand in the secondary market.
So currently, who are those exact type of buyers that are buying from their brokerage account? Is that typically like a millennial type, or who are those? I mean, I guess on the one side for the private placement and get into the trust, right? You obviously set a standard that's accredited investors, right?
Yeah.
And then there's also qualified purchasers and everybody, and then there's those that are coming in from their registered investment advisor, correct? Under that private placement that qualify.
Yes. Yeah. Accredited investors is the minimum. You mentioned qualified purchasers. That's a much higher standard. We don't require that. So anyone who's a qualified purchaser would certainly be an accredited investor.
So anybody who's an accredited investor come through the private placement, and then they have the ability after 12 months to unlock their shares and sell them through their brokerage account.
Yep. Mm-hmm.
And typically, those buyers are who that are buying those shares? The
secondary market buyers. I mean, that could be anybody. I mean, we've talked to just retail customers of all ages, but you also have, in a lot of cases, you have RIAs that a lot of people are used to building portfolios with certain programs or software and certain accounting systems that only handle certain types of products. And they may not have the infrastructure to buy a private placement on behalf of their, say, 500 clients that they've got. So they're looking for scalable solutions that are exchange traded. And so we have seen interest from advisors looking to say, okay, I want to put, 1% or 2% into, these 100 client accounts kind of all at once. They're going to need a solution like that rather than a privately placed, accredited investors only type of product. So basically, short answer, there's a lot of different types of investors that want to trade in the secondary market, including institutional. If you count advisors as institutional investors, including institutional.
So how important is it for you guys to have some kind of marketing campaign, I guess, for that secondary market to build up buyers and keep that liquidity available?
For us, it's important to have a marketing campaign because we're relatively new, and just making people aware of who we are, aware that we exist, aware about our products and the main features. But actually, the supply demand dynamic for us, anyways, is to where our product is trading at a premium, which indicates there are already, I don't want to say too many buyers. I don't want to discourage anyone from coming, but there are more buyers than there are sellers. And that's because our fund is small. It's 150 million or so right now versus, the potential size of interest out there. So we're just trying to keep a consistent marketing message out there so people remember about us, know that they have options. There's only been one player in the space for the longest time. So we came in, tried to cut fees drastically, partner with different service providers, and just offer people a choice. So we want to make sure they remember to come stop by Osprey.
That was one of my next questions, is some of the differentiators that you guys have versus your competitors.
Yeah. Well, at the end of the day, I mean, it's kind of like a gold fund, a gold ETF. You really care about the couple things, like, is the gold actually there? What are the fees I'm paying? How's the secondary market, et cetera? So is the Bitcoin there? We partnered with Fidelity. We feel like that's a very well-known brand in, retail investment America. Fidelity's probably the biggest company custodying Bitcoin right now and a trusted name. So in our trust, the Bitcoin is held by Fidelity, and that's who the trust pays to safeguard those assets. Fees, our fund is significantly lower priced than the competition. Got a 49 basis point management fee, a few other custody fees and things that accrue, but all in, we don't expect those to be more than an additional 30 basis points this year, probably less. And so that's quite a bit lower than what's out there. And then, we're a new brand. We have a new take on the space. We're trying to do things in a way that's, built with not just end investors in mind, but also with their advisors. And we understand advisors. I come from an ETF background, launched over 100 ETFs and ETNs. And we know that fiduciaries care about certain things. They want to make sure that there is transparency and there are arm's length relationships. They want products and companies that are as free of conflicts of interest as possible. And so we came at it from that perspective, trying to build, a slightly better mousetrap there.
Now, do you think that these products are a way for these investment advisors to still retain all their clients' capital under management without telling them to go to the spot markets and lose that?
Yeah, I mean, that's a big deal. Yeah, for sure. Advisors have been hearing, and it kind of crescendos and then goes away. But in 2017, for sure, every advisor's like, get me into Bitcoin. How are you getting, if you're not getting me into Bitcoin, I'm pulling my account, and they don't want that, obviously. And so giving them another option in the space that's a bit more palatable in terms of fees and structure, we felt was a value add to the advisor economy. So yeah, that back to your earlier question of why would somebody do this besides, instead of buying spot Bitcoin, that's one of the reasons, is because the advisor community can watch over client assets all in one bucket. The minute you pull it out, and lots of people are comfortable with that. That's totally fine. If you're a self-directed customer, you know what you're doing or think you know what you're doing, and you want to do that, hey, it's America, I'm all for that. But a lot of people, want an advisor to run their money, or at least stand watch over it and talk them off the ledge when they feel like, selling low and buying high. And so that gives the advisor a way to do that for them. And that includes their crypto holdings.
So we've seen some of the competitors' products lately have a negative, obviously, premium or a negative to NAV trading, correct, in the markets. And it's a, kind of a big talk and maybe a concern. Do you think that's slowing up the appetite for these trusts?
I do actually. That's a new phenomenon, and our fund has not traded at a discount, and I think that that's an indicator of the supply versus demand for our product. But I know the other one has, and I think that the other one's quite big at this point and probably oversupplied in terms of, you got to appreciate it's a bit of a crude situation where you create the supply a year ago and then hope. So I think it's temporary. Our focus is we want to look forward. I do think an ETF is coming. I don't know exactly when, and you'll probably hear some more news from us in that realm without too much time passing. But the discount is problematic for these products for sure.
And so, do you think that at least for Bitcoin, you think the ETF is going to kind of, I guess, solve this or take this problem out?
The ETF will cause either products that are going to be ETFs to trade in line, or products that are not going to be ETFs to fall to worse discounts, I think. So it depends.
It seems like everyone's filing for ETF these days, right? It's like if we have 10, 20 ETFs roll out in the first 24 months, how do you think, the allocation goes to what, and kind of how do you differentiate yourself and be a leader, right?
Yeah, no, it's a great question. And, the ETF industry has not really ever seen something like this. We haven't had this. I think that there will be multiple products rolled out at the same time or very close to the same time. Unfortunately, I think what that probably means is that investors are going to be a little confused as to which to buy. And there could be some that sit on the sidelines and wait to see kind of what takes shape there. So I think the take up might be a little slower than it would have been otherwise if you have, a 5 or 7-way tie or something like that. But over time, there will be, I think, 2 or 3 that emerge as the leaders. And those will be those who have the best product structure, the deepest markets, the lowest fees, and the best brands and distribution strategies.
And do you see any other, from an ETF standpoint, do you think there's anything else that will be approved in a short amount of time from like Ethereum or anything? Or do you think Bitcoin's the only talk for probably next year or something?
Yeah, I think it's mainly Ethereum. Mainly Bitcoin. Ethereum would be the next one. Not sure how long that one takes. Probably whatever they do with Bitcoin,
another year or so.
Yeah,
that's exactly what I think.
It's probably being generous.
Well, what else? Let's see. What else? So we have access. People could get in through the PPM. They get in through the secondary market. What are some of the benefits? Obviously, through an IRA account from a tax standpoint.
Yeah, to me, that's how I hold my Bitcoin fund exposure, because I don't plan to sell Bitcoin, but if I do, for example, let's say I thought that this bull run peaked out and it's going to be another 80% crash, and I feel lucky and I'm going to do some tactical selling there, why not have that in an IRA? The gains here are potentially huge. Who wants to pay tax on that? So, and that's normal portfolio construction stuff where people are looking at either your highest yielding products in terms of cash flows, or your highest expected return products, and where you feel you might need to be rebalancing a lot. And those are the assets you run in your tax deferred buckets versus your plain vanilla brokerage account. So yeah, if people can do this through IRAs, that's the best approach. And I will I'll plug Alto IRA. They're a new company that we've been working with, and they make things pretty easy for investors, because it's not always easy to get on these platforms and get an accredited investment done through some of these IRA platforms. Those guys are pretty good.
Yeah, some of these IRA platforms, my experience has been a little slow and cumbersome process, not quite automated like we would like in 2021, right?
Something to do with carrier pigeons, yeah.
But anyway, you also mentioned Fidelity as the custodian. Do they carry insurance, or kind of, what protections are in place for, everyone that owns shares of the trust?
Yeah, so Fidelity does carry insurance, as do most of the larger custodians these days. My feeling on that is, insurance is going to protect a certain amount, but if you've dealt with an insurance company, it's always it's always a little dicey. And typically these insurance policies only cover, a small proportion of the assets that the firm's holding, and they cover the hot wallet. So I'm not speaking to Fidelity's policy per se. I'm just sort of generalizing. So that went to our decision to work with Fidelity because, I'm not putting any words in their mouth for sure, but I personally have the feeling that Fidelity is a big reputable company. If something were to happen that was beyond the scope of their insurance policy, okay, they might be more likely and more capable of considering doing something on their own to make things right, to safeguard their own reputation than somebody you never heard of. So
Yes,
that went into our analysis.
Established balance sheet and brand is basically I agree there. I think as that gets more established amongst players, people will build a lot more trust in the space to utilize, vendors and certain people to do things.
Yeah.
And so what else on, we talked about the negative premium, but, how does the market solve that? Do they just stop offering the private placement for a period of time until that counterbalances? What are the options there?
Yeah, I think that product's closed right now. So that's one, kind of turn off if you got price going down, turn off the supply, which also need to stoke demand, right? So not sure what their plans are. I think ultimately, the ETF, like you said, solves this. I mean, I don't know that it fixes, GBTC's issue, but, for new investors, they'll have options that where they no longer have to really worry about premiums and discounts, at least in the Bitcoin space.
And do you think is there any risk to those investors that hold that on secondary markets?
They hold what?
Like GBTC on the secondary markets, or, when it starts trading at a negative, do you think that's a risk?
It is a risk, yes.
Yeah, I mean, hey, these are all the questions everyone's been asking, right?
So yeah, I got to be a little careful. For, I don't know, 6 years, there was no such thing as a discount, and now there is one. And how long is a piece of string, right? It's how big is a discount? Well, I mean, it's not going to get any bigger than 100%. We know that, but I could envision some scenarios where it widens out for sure. So I do see that as a risk.
All right. Well, as we, hopefully a Bitcoin ETF comes down the pipe here, and what other products are you looking at, expanding into? Let's get into that, right? Because Bitcoin's kind of been around a little while, and people are interested in these alternatives that might have a little higher multiple on them.
Yeah, for sure. So we are totally focused on, coins 2 through 100. Let's say,
okay.
If you look at the market cap, obviously more towards 2 than 100, but there are definitely some interesting coins and projects out there that we think investors want access to, where no product exists, right? So we do plan to launch a number of those, and we'll have announcements on our website, or, if people want to know, just subscribe to our newsletter or follow me at Greg King Osprey on Twitter, and we'll make announcements about those products. But, like I said, I've been involved in Bitcoin since 2013, the 2017 run up and all the ICOs. I mean, there was so much noise there, I could barely keep track. And I was really focused on Bitcoin. This time around, there are, I think, a lot more credible projects on a percentage basis that are launching. And so, I mean, there's still a lot of noise, but there's some pretty cool stuff out there. So we're excited about the pipeline of products that we've got, and that we think we can bring to investors. I think whether it's DeFi or proof of stake versus proof of work stuff that's happening, there's a lot of cool projects. I'll better leave it at that, but you'll definitely see more from us pretty soon.
And how do you gauge investor appetite? Is that something in the screening process when you speak to all these different investors or investment advisors, kind of what their clients are asking for?
Yeah, we have a very anecdotal way of doing it. We also have quantitative ways to do it, but we're always soliciting feedback from our key investors, and as that group grows, they're a great sounding board for what's interesting out there.
Now, with some of these DEXs that are, starting to show some cash flows or sharing them back to token holders, do you see more of a demand in that area? Because it kind of ties a little bit into the traditional world.
Yeah, one of the challenges with some of those is really if they're a security or not. So taking a step back, we have that whole analysis, which we didn't talk about yet, but it's a challenge, right? It's a challenge because the Bitcoin's status as a commodity or as property is pretty clearly set at this point. I think people feel pretty comfortable about ETH, but beyond that, you don't really have a whole lot of official pronouncements saying this or that. I mean, and if you go digging, you have official pronouncements saying, everything else is a security. I won't name names, but so we don't believe that's true, right? And people are digging into it on a case by case basis. There's a lot of lawyers doing a lot of work, not just for us, but just the industry. Problem with a lot of DeFi is the security piece of it.
Got it. And kind of you're saying if there's not maybe agreement amongst the other players or other attorneys within the industry, that it should be a pass until there's agreement. So this way, if it's ever questioned, or like kind of like example, we saw Ripple, right? Like it's in some people's offerings, and then all of a sudden it's gone, right? So like you said, how do you move forward with no decisive decision beyond Bitcoin or maybe Ethereum? How do you move forward?
Yeah, so ultimately we just have to make a judgment call, and we just try and make sure that it's going to be a well-informed one, right? Do our due diligence, do our homework, talk to people who live in this space on a day-to-day basis, and try to just make sure that we're working on projects where we're not going to have to delist Ripple, 30 days later or something like that. So yeah, but this is part of what makes it exciting is there's so much new ground that's being kind of covered here with all these coins, tokens, and projects, that there's still many unknowns, like really basic things like what we're talking about. Is this thing a commodity or is it a security? So we'll make the best decision we can with the information we have, and we'll adapt. That's all you can do.
Any specific assets that you're allowed to mention that kind of, maybe at the front run of what may be to come?
Well, I just, I'll give you something without giving you anything, but we're obviously looking at ETH pretty closely here, and then on from there.
Got it. And any other types of, do you see yourself doing a basket of multiple cryptos within one offering?
That's a great question, because I know there are other products out there that are index based. So here's my view on that. Two things. One is I definitely understand indexing and the need for it, and it makes a ton of sense in a lot of contexts. But I would just be a little bit cautious for two reasons. One, the space is so new, it's really hard to know what's the best indexing approach. And you've seen that already, right? You can't take what's true in the stock market and just kind of port it over and say, hey, this is the S&P 500 or this is the Dow 30 or whatever. Kind of doesn't make as much sense in the crypto world. So you got to be careful there. And if we do an indexing product, or I should say when we do an indexing product, we want to make sure we're rolling it out thoughtfully in terms of those constraints. The second piece is tax, and I don't think people are focused on that. These products have a pretty horrendous tax treatment because you are doing rebalancing. Our Bitcoin trust is a pass-through vehicle for tax purposes, and because we never sell the Bitcoin, there's really nothing happening there. But when you're rebalancing, and when you're rebalancing big time, where an entire coin just gets out, thrown out, and you got to put a new one in and all that, there's a lot of movement there, and the potential tax consequences they're unknowable in advance. And so I think as the kind of December 31st click through a couple of times, people are going to start to realize with some of these products that the tax side is something that they need to keep a closer watch on. So we just want to be thoughtful about it, but you will see an index product or two come out.
So in simple words, if you're getting into an index product where they have they're tracking a basket of cryptos, best to do it out of the IRA, correct?
Yeah, I would think so. Yeah, for sure.
All right, cool. What else would you like to leave us with in regards to the Osprey Fund or anything in particular?
No, I would just encourage everyone to come to our website, follow us on Twitter. We are planning a number of new products. We're also planning some educational webinars and things like that. If anyone has feedback, please leave it at our website on the info box. We just want to make sure we're engaged with clients or potential clients. And we want people to understand what we're all about, which is, my thing is, I'm I'm a big believer in free markets, and what we've built everybody in America is the greatest, financial markets in the world. I want it to stay that way, and I want people to have access to all kinds of investments within reason. Of course, I'm totally good with disclosure and all the rules around that. I don't think people should be, buying crazy stuff on, out of a chat room or anything like that. But I do believe that mainstream investors, have the right to get access to some of these products through regular brokerage accounts, and so that's all we're trying to do.
All right, and we always leave off with a last question. Hopefully, it helps all of our investors out there. But what is the biggest thing you've implemented in your life that has helped increase your net worth?
Great question. Yeah, my net worth has just been impacted by two things: building companies and buying Bitcoin. So I would say that the two, if I had to point to one rationale around success in building companies, it's don't give up. And, if something doesn't work this way, kind of keep trying. And then buying Bitcoin is don't be afraid to try something new.
So for everyone listening, take their extra disposable cash, buy some Bitcoin, and start that business up, and know when to pivot, right?
Know when to pivot, man. Yeah. know when to fold them. There's no shame in that. You got to just keep trying.
I appreciate it, Greg. Again, where is the best way to find you?
Yeah. So at Greg King Osprey is my Twitter handle. We're ospreyfunds.io, because we're crypto, right? So you can't do .com. .io. Okay.
All right.
Osprey Funds.
Thank you for coming out again. Talk to you shortly.
Thanks a lot. All right. Talk soon.
Hey, everyone. Thanks for watching my latest interview. If you like what you saw, please click the subscribe button below to become a member of the Joe Robert community. Be sure to hit the bell to turn on all notifications so you always know when I post a new video. Tell me what you thought about the content in the comments below. I always read them and would love to answer any of your questions.